Wall Street is undergoing a seismic shift, and at the heart of this transformation is Jane Street, a tech-driven market maker that's rewriting the rules of the game. But here's where it gets controversial. Just as Jane Street is setting record-breaking trading numbers, it's locked in a high-stakes legal battle with India's securities regulator. A clash that could reshape global regulatory oversight. So is Jane Street a disruptor or a disruptee? Let's dive in. Only months after a dramatic showdown with the Securities and Exchange Board of India, SEBI, Jane Street has dropped jaws with its second quarter 2025 earnings. The numbers? A staggering $10.1 billion in net trading revenue, a Wall Street record. To put that in perspective, JP Morgan reported $8.9 billion, and Citi trailed further behind with $5.879 billion. And this is the part most people miss. While investment banks are having a good year, Jane Street is having a phenomenal one. But the celebration is tempered by ongoing legal drama. Just yesterday, an Indian appeals court ordered SEB to respond within 3 weeks to Jane Street's claims that crucial defense documents were withheld. This isn't just a local squabble. Fitch Ratings has flagged the case as a potential global growth risk, warning that increased regulatory scrutiny could stifle Jane Street's momentum. Could this be the Achilles heel for a firm that's otherwise unstoppable? Speaking of risks, Jane Street's balance sheet leverage stands at 5.4 times, and if it climbs above 10, a downgrade could be on the horizon. There's also the concern that capital growth might lag behind balance sheet expansion. Yet, there's a silver lining. If the India situation resolves favorably, or if leverage remains in check, Jane Street could emerge stronger than ever. But here's the twist. Jane Street isn't the only player in this high-stakes game. Citadel Securities and Hudson River Trading are hot on its heels. Citadel, despite an 8.4% revenue dip in Q2, has ramped up compensation and benefits to $1.81 billion, a move that signals aggressive growth ambitions. Meanwhile, Hudson River Trading more than doubled its revenue to $2.62 billion in Q2, fueled by market volatility from Trump's trade tariffs. Controversial take. Are these firms the new G-SIBs? Or is Wall Street big enough for all of them? Fitch Ratings BB+ affirmation for Jane Street adds another layer of intrigue. While the rating highlights reasonable durability, it underscores the India-related uncertainty as a wildcard. Thought-provoking question. Is this a temporary hurdle or a harbinger of tighter global regulations? As Jane Street, Citadel Securities, and Hudson River Trading jostle for dominance, one thing is clear. The old guard of Wall Street is facing unprecedented competition. Final question for you. Will these tech-driven market makers redefine the industry, or will regulatory headwinds clip their wings? Let's hear your thoughts in the comments.